CIBC Asia Pacific Fund, June 16, 2024, NAV, offering price $10.02 by Dwayne Gray, analysis completed August 1st, 2024. CIBC Asia Pacific Funds, June 16, 2024, net asset value per share, offering price $10.02. Total mutual funds net asset under management in Canada is in 2023 is more than 1.86 trillion. It's a big industry where people make much money and access and utilizations with very liquid and dispersal of funds when needed. Liquidity, very timely. T1 next business day. This is an equity fund. This fund offers diversity of mixture of Asian corporations, so to be exact, with some of the top holdings: a Tenet Holding Corporation Limited, 2.9% of the fund; BYD Corporation Limited, Class A shares, 2.5% of the fund; Tata Consultancy Services Limited, 2.6% of the fund. Out of 10 in volatility of the fund is in 10 out of 10 in volatility, this fund is showing 4 to 6 medium. So risk is extremely low for this fund in the middle so risk isn't extremely low or high for this fund in the middle of the spectrum. You can purchase plan as a pre-automatic or any regular income you receive. Paycheck, you can plan for a withdrawal out of your check at the end of the business day, and we can deduct it on the following Tuesday. With as little as of contribution at $25, and in turn in full investment on $500 at $300. At this point, you receive dividends and a in December. This is when dividends will be distributed. This is if you have reinvested units. $500 worth of a fund at $10 NAV equals 50 units. $50,000 worth of fund at $10 NAV, 5,000 units. This is some measure just introducing if you reinvest your dividend and the NAV of your fund decreases. This is just showing you how much units you'll receive if you reinvest dividends with an adjusted NAV. Also, systematic risk, mutual funds units can lose in foreign markets. In other words, they are subject to systematic risk. Volatility is extremely hard to predict. Tax complications, conflict schedules between the fund manager will utilize tax and time horizon of clients. Director and trustees still needed. Director and trustees, fund manager CIBC Imperial Bank of Commerce. Distributor, me financial advisor. Portfolio manager CIBC Asset Manager NC. Distributed annually December. Minimum investment $500. Smallest investment $50 incrementally. National Instrument 8102, advertisement of mutual funds on local radio stations and local TV, Eastern Channel, etc. So this fund is offered fun fact and progressive is given out. Also AIF and audit and financial statements. Inception 1993, September. May utilize fixed dollar withdrawal plans for retirement savings, also including CPP and OAS for persons using funds in addition and account addition for retirement. Past performance is not indicative of future returns or promise or yield. CIBC Asia Pacific Fund. NAV calculation. Total assets subtract total liabilities divided by total shares outstanding. Shares charged none. Fee expense. You don't pay these fees expenses directly. They affect you as you reduce your fund's returns, both simple, etc. MER. Management expense ratio 1.67%. Trading expense ratio TER 0.28%. Expenses 1.95% fees. Back and load. Assets under management 2,729,616 assets under management. This fund has performed in the lowest quartile for the last 3 years since inception. 1 plus year equals plus APR divided by M at the formula M, which is compounded over the stated period of a year. Over 6 months of a yield of 6.9% is pretty good with from a balanced and return compound return percentage. This fund has only outperformed the benchmark in the last month for the rest of the year. And the current new norm has also outperformed the only has also only outperformed the first. Last month, November 2022, 14.32%. Worst month, January 2022, negative 7.74%. This type of fund is the second most riskiest mutual fund out there in class. 3-year analyst of the Asia Pacific Fund. This fund has underperformed the index by a substantial amount and low next to the category in our regards to ROE or our return on equity or return on investment. That is approximately 2,000 less than the category and 8,000 less on a 10-year on index with return. With the ETF yield lost 2,000 on the investment equaling 9,000 risk premium, equaling about 1,000 per year in capital gains and dividends incomes. Based over the 3-year term, what you term to date, the investment is 105, which is 0.05% more riskier than the market and translates to a volatility of 0.5% more volatile than the market. Also, the mutual fund in this category is 1.10 more, which equates to it being 1/10 more point more riskier than the market or index. So, be 1/10 less risky than the otherwise market. This investment alpha is performing negative 7.2% below the overall market index. In the fund in this category is performing the category by negative 4.92%. And next is underperforming the overall market by 1.53%. Sector is performing not so well over a 3-year period. Sharp ratio for investment is a return of negative 0.53% or negative 0.53 of a point X return on the mutual fund. The category is giving a negative excess return of negative 0.29%, no 0.29 on funds in this section. Lastly, the index is giving an extra return of negative 100 of a percentage point on the average index on market. Alpha investment is negative 4.51% and is the portfolio dictates the negative ability to pick the funds to garner investment over a 5-year period. Category was a little better at garnering a return of 0.35%, but nonetheless index good for garnering a return of 66% better than the index and other possible managers. It's outperforming. Chart ratio. Over 5 years, the investment garnered 0.6% or 0.6% excess return of the mutual fund. The category better 0.25% excess return and instantly outperforming by 0.42% excess return on the portfolio. Over 5 years, this fund investment is just a tad riskier than the overall market. Then the profit being distributed compared to capital and index really seems to be an attractive investment. The mutual fund is making much money, but is riskier than the category and index. Volatility stock equity in Asia, but is a resourceful way to diversify securities in the Asian region through mutual fund portfolio offered by Cibc in Canada. About $7,000 return on equity investment on a $10,000 investment over 5 to 10 years. This could be a salary of $35,000 in retirement over 2 years with the dollar return figure if you had invested $110,000 and gotten a return of $70,000 return on equity. All in all, it equates to 70% yield return over a 5 to 10 year term throughout the bull market, over 2010 to 2020, transitioning to quantitative easing through the COVID. The carry was worse as you lost more than investment but made approximately $8,000 nonetheless. Lastly, the index was less risky with the category of carry a fund at approximately 0.87 per 0.87.